interest rates will remain on hold at 2.5% following the RBA's decision this afternoon. Now, while some parts of the economy, notably retail and housing, are responding to the record low rates, unemployment at a 10-year high of 6% is likely to keep rates where they are for the remainder of the year. Let's get more now. I'm joined by Brooke Corty from Sky News Business. No surprises really today.
No, certainly it's interesting to see them reiterate this idea that we're in probably for a period of stable interest rates, Selena. The statement that we got from the Reserve Bank of Australia today, not too many changes from the past month, but there are three in particular I think are worth noting. One of the big ones was that the Reserve Bank today said that the Australian dollar remains high by historical standards. If you go off the numbers, it makes a lot of sense. The average in the past 10 years is kind of the mid to high 70s. Currently we're at 89 cents against the US dollar. But what that does in terms of including that in the statement is shows that the preference of the Reserve Bank is still to have a lower currency from here. That was an important inclusion because these words are very carefully chosen when the Reserve Bank puts out these statements. Also, the Reserve Bank seemed to harden its language on housing, saying dwelling prices have increased significantly over the past year, significantly being the important word there. And the third change that is important in the statement today is that they have actually dropped the mention in the second last paragraph that the bank expects growth to remain below trend for a time yet. And that does seem to suggest that generally the Reserve Bank feels like the picture is starting to get a bit more positive. It's an interesting picture, of course, that the Reserve Bank is juggling because on the same day that, say, the NAB, the team of economists at the NAB comes out and says we're headed for a 6.5% jobless rate this year, you get a read on housing approvals or building approvals saying that's jumped by 7%. So there's lots of push and pull factors through the Reserve Bank, which is why it leaves rates on hold. The Australian dollar this afternoon also very choppy, trying to decide just where the Australian Central Bank is going. Initially spiked up, then dropped back. So for us in Australia, I think if you've got a mortgage out there or you're looking at your term deposits where your cash is sitting in the banks, stable interest rates is what we can bet on for a little while yet. Some analysts saying 6 to even 12 months of that. But I guess the next inflation number is probably going to be one of the key ones for the Reserve Bank and also that jobless rate.
OK, Brooke, thank you so much.
Thanks.
Brooke Corty there.